Welcome to The Explainer. Today, we're diving into a really fascinating intersection of big macroeconomic investment and real-world climate survival. We hear a lot about the physical devastation of climate change, but we rarely talk about the financial engineering it actually takes to bounce back. So we're going to break down how a massive, pioneering investment is trying to solve some incredibly urgent, literally life-or-death climate problems in some of the most vulnerable nations on Earth. We'll be looking at a brand new financial vehicle designed to, well, quite literally storm-proof an entire region's economy. Okay, let's dive into this. It's got to be one of the most critical challenges of our modern era. How exactly do you storm-proof an entire economy? We're talking about the life or death stakes facing the highly climate-vulnerable Caribbean region. These nations are facing recurring threats from natural hazards that can just completely wipe out infrastructure and freeze commerce overnight. And when a disaster strikes, you don't just need emergency aid, right? You need an economy robust enough to take the hit, support the people, and actually rebuild efficiently. But how do you finance that kind of deep structural resilience? To ground this physical threat in reality, we don't need to look any further than recent history. Think back to 2025, when Category 5 Hurricane Melissa swept through the region. It caused absolutely massive devastation and disruption, particularly in Jamaica, the Bahamas, and Dominica. That event highlighted an urgent, glaring need for way more investment in resilient infrastructure. Because the brutal reality here, natural hazards like Melissa can instantly reverse years, sometimes decades, of hard-won development gains. I mean, one single storm can literally wash away years of economic progress.
Part 1. The agitation. A hidden financial threat. Now, we all see the physical devastation of hurricanes on the news. The downed power lines, the flooded streets. But there's a less visible, yet equally dangerous roadblock hindering recovery in the Caribbean.
This hidden roadblock comes down to domestic credit. In these small states, it stands at an alarmingly low 32.8% of GDP. Because these local credit markets just aren't deep enough, businesses are constantly starved of the long-term growth capital they need. They need that capital to expand, fortify their operations, and generate sustainable jobs. For a local economy to really thrive, it needs access to borrowing to build strong, weather-resistant facilities or upgrade supply chains. But right now, the local credit markets just do not have the depth to fund those massive resilience projects. And that lack of credit, it creates a staggering reality, a $22 billion financing gap. Yup, billion with a B. This is the massive shortfall between the capital these growing Caribbean businesses and transformative development projects actually need and what they can currently get their hands on. $22 billion. Without bridging this massive canyon, adequately preparing for the next natural disaster is, frankly, fundamentally impossible. Part 2, the solution. A pioneering investment. So how in the world do we bridge a $22 billion gap? Well, this is where the International Finance Corporation, or IFC, which is a member of the World Bank Group, steps in to bring a targeted financial intervention to the crisis. The specific vehicle they're using to do this is the CCRF, or the Caribbean Community Resilience Fund. So what is this exactly? It's a blended finance platform. That basically means it creatively mixes public or philanthropic funds with private investment to significantly lower the financial risk for everyone involved. It's designed specifically to mobilize long-term capital for climate resilience and sustainable development. Developed in partnership with the CARICOM Development Fund and managed by Cygnus Capital Limited, it's this tailor-made financial platform crafted directly to fix those historical financing gaps that have been holding the region back. Let's break down the actual mechanics of this historic intervention. The IFC is investing up to $15 million into the CCRF debt subfund. This is a huge deal, folks, because it marks the IFC's very first debt fund transaction in the entire Caribbean region. And they've structured this capital really strategically. Up to $5 million goes into the senior tranche, which basically just means this money gets paid back first and carries less risk. Then, up to $10 million sits in the mezzanine piece, acting as a flexible financial bridge right between debt and equity. This customized financial structuring provides the highly flexible capital solutions tailored exactly to what the region needs right now. Now, to humanize all this financial jargon, let's look at how Beresford Gray, the co-founder, president, and CEO of Cygnus, frames the initiative. He says, building a more resilient and sustainable Caribbean is central to Cygnus' mission, and IFC's investment represents a significant milestone for both the CCRF platform and the region. He also points out that this fund will unlock economic opportunities and contribute directly to job creation. So it frames this massive institutional investment not just as a profitable venture, but as a dedicated mission for regional survival and economic empowerment. Moving on to Part 3, the execution, following the funds.
We know the IFC is committing up to $15 million, but that's actually just the tip of the iceberg. The CCRF debt subfund is aiming to raise $75 million total, with the potential to scale all the way up to $125 million. Now, what's really interesting about this breakdown is how that capital gets deployed. Strategically, up to 70% of this money will be given as loans to medium-sized businesses. This is all about empowering the local private sector to operate effectively, expand, and hire people in a stable environment. The remaining 30%? That's dedicated specifically to resilience and sustainability projects, including critical infrastructure. So it's a two-pronged attack. Fortify the everyday businesses while simultaneously building the physical infrastructure needed to withstand intense climate shocks. So it's a two-pronged attack. Fortify the everyday businesses while simultaneously building the physical infrastructure needed to withstand intense climate shocks. And we absolutely cannot understate the massive geographic scale of this intervention. The funds are designated to flow directly into these 13 specific climate-vulnerable nations across the Caribbean. From Antigua and Barbuda all the way down to Trinidad and Tobago, this capital is meant to provide a widespread regional shield against the financial devastation that so predictably follows natural disasters. But they aren't just throwing money at the wall to see what sticks. The fund targets 7 priority sectors: energy, water, agriculture, sustainable housing, transportation, financial services, and information and communications technology, or ICT. These are literally the foundational pillars of any modern society. By driving productivity and expanding access to essential services within these specific sectors, the fund ensures that the money actually builds long-term, systemic economic stability right from the ground up. Oh, and beyond the loans and the infrastructure capital, there's another really vital component here: a dedicated $7.5 million technical help facility. This is specifically designed to assist enterprises that are working on these resilience projects. It ensures that regional businesses don't just get a check, but they also get the expert guidance required to effectively implement complex climate adaptation and economic stability measures. Which brings us to a final thought. As climate risks grow, is flexible private capital the ultimate umbrella? We've seen how limited domestic credit and a $22 billion financing gap leave the Caribbean dangerously exposed to natural hazards like Hurricane Melissa. But we've also seen how innovative, blended finance vehicles like the CCRF are stepping in to provide customized, risk-lowering solutions. So it leaves us with a pretty powerful concept to consider. Perhaps the definitive key to surviving a changing climate isn't just pouring stronger concrete, but building stronger, more flexible financial ecosystems. Thanks so much for joining me on this explainer, and keep learning.